If you're thinking about taking a prop firm challenge, then watch this entire video before you do. While prop firms may look like this sexy new opportunity for traders, the reality is the prop firm industry is full of scams and deceit. And did you know that only 6% of people that actually take a prop firm challenge actually end up passing both phases and getting funded? In this video, I'm gonna give you the raw, honest truth about prop firms. We're gonna cover what they are, we're gonna cover how they actually work and how they actually make money, whether it's a good idea for you to trade with them or not, some of the red flags to look out for when choosing specific prop firms, and then ultimately, if you do decide to trade with a prop firm, how you could 10x your odds of actually passing and becoming successful. So let's go ahead and get into this and talk about what prop firms actually are. And for you to better understand this, let's understand the history behind prop firms before it became this online Forex prop firm industry that we're familiar with today. Previously, prop trading really originated with banks and with hedge funds. And essentially banks and hedge funds, what they're doing, right, is they're taking in money and then they're looking for ways that they can generate yield or generate return on these funds that clients are depositing into their bank or into their hedge fund. And so generally what would happen was they would open up a section of the bank or the hedge fund that would be dedicated to prop trading. And essentially what that means is there'd be dedicated traders sitting at a specific location of the office, and they would essentially be trading the deposits that come in from these banks or the hedge fund clients. Now, historically, how it would work is they'd put out like an ad in the newspaper or something like that looking for traders. Traders would then come in and they would take like a 2-week course where they'd basically learn how to trade, and then they'd be given very strict risk parameters. And if they could stay within these risk parameters and they could pass their test, then they'd ultimately get hired as a prop trader for this bank or this hedge fund. Now, the reason it's a win for the bank or hedge fund is because now they're able to generate yield on different trading strategies. So they're diversified across a bunch of different traders that are supposedly going to help them generate yield. And for the prop trader, it's a win because now they're getting access to a lot more money that they can trade with, and they get a profit split on without having to risk their own funds. So this is how prop trading was originated. And now we see all of these online prop firms that have come up, which make it a lot easier where anybody from around the world can sign up, take a test, and if they can pass the test, they get access to funds to trade with. So with that being said, how do these prop firms actually work and how do they actually make money? Because that's important for you to understand as well. Generally, the way that this works is you essentially will select a challenge that you'd like to apply for. So let's say that you want a $100,000 account. You go in here, you select 100,000, then you generally have like a 2-phase test. And maybe this is review for you, but generally on phase 1, you have about 30 days. In this scenario, it's asking to do 8% target with not more than 10% loss overall or 5% loss in a day. If you're able to do that, you move on to phase 2, where you have 60 days to essentially do a 5% profit target without 10% loss overall or 5% loss in a day. Now, after you do that, you become a funded trader. You get access to this $100,000 account. Now, a couple things to notice is that actually passing these prop firm challenges is really, really difficult to do. Like I mentioned, only 6%, according to My Forex Funds, one of the biggest prop firms in the industry, they said that only 6% of people that take their challenge actually end up passing both phase 1 and phase 2 and getting funded, or only 1% or less actually end up getting a payout. So the odds of actually doing this is really, really small and really difficult to do. And this is how the prop firms are making their money. So how does the prop firms actually make their money? Well, in order to take this test, right, you have to pay a test fee. In this case, it's 499 euros. So if you just think about the numbers here, if only 1% of these people actually get a payout, I mean, the prop firm's making 100 times $500 for every person that actually takes out a challenge. And the way that these prop firms really work, which is kind of interesting, is that once you actually get funded, a lot of the times they're not actually going to fund you with real live money. They're actually just going to let you trade a demo account, which you're going to trade a demo account. And then what the prop firms will actually do is they'll pay out the people that actually, the small percentage of people that actually make a payout, they'll actually pay that money out based on people that have failed the challenge. So it's just kind of like an insurance model, right? Where these insurance companies, they know their numbers and they know that, hey, if I charge, $100 a month or whatever, then I'm only gonna have to pay out X X amount in accidents that I actually have to pay out. It's the same thing with these prop firms. They know their numbers. They know that majority of people are going to fail and not going to pay out, and they'll pay people out based on these people that failed the test fees. Now, with that being said, if you do end up getting past and getting your first payout, then some of the times the prop firms will actually start to A-book you, which means that they're actually sending the trades to the market. But for the vast majority of people, they're not actually even doing this. So the big benefits to prop firms, obviously you get access to a lot of capital to trade with, which if you do actually make profits on the funded account, then of course you do get paid out the profits. But as you've seen so far, the likelihood of passing and getting a payout is really, really small. And I'll show you how to change it and how you can increase your odds by like 10 times. So now that you know a little bit about how these prop firms actually work and operate, let's talk about a few red flags that you should be aware of when choosing a certain prop firm. So the first thing that I'll say is that there's new prop firms that are popping up left and right all of the time. And there's a lot of prop firms that are just white labeling other prop firms. And the problem with this is that a lot of these prop firms are going out of business, and they're going out of business quickly because they don't have the expertise. They don't understand their numbers. They don't know how to actually run a proper prop firm. And so they're kind of just fly by night. And we've seen this happen time and time again, where people go and they'll spend $500 to take a challenge at this brand new prop firm because they have 10% better rules or some new feature or something like this. And then ultimately the prop firm actually doesn't end up paying out. So my three favorite prop firms right now are True Forex Funds, My Forex Funds, and FTMO. These are all prop firms that have been around for a while, that have literally thousands and thousands of customers, that have tons of proof that they're actually paying out. And these are prop firms that I've actually used, our community of traders have actually used, and we've had good success with. There are some other prop firms that we'll recommend, and you can download this sheet below so you can compare the different prop firms and kind of what the rules and regulations are. You can check out that comparison table in the link in the description below. Now, a couple other red flags that you should look out for is a lack of support. If they don't have like live chat support on their website, or they're not quick at getting back to you, this is definitely a red flag. If they don't have open communication in their Discord. Another thing that's a red flag to me is if they allow high frequency trading. Okay, this has been this whole trend that's happening in the industry where people are using these high frequency trader bots, and essentially, they can pass like 100% of the time. The big problem with that is the fact that the prop firms that actually allow you to do high frequency trading, they're not actually going to pay out. And how do we know this? Sadly, from personal experience. We had done this for some of our clients as well, and some of our own funds. We signed up for some of these newer prop firms that were allowing high frequency traders, and sure, we're able to pass boom like that with these high frequency traders. However, these prop firms were not able to pay us out, and that was a big, big red flag. So I would probably stay clear if they're allowing high frequency trading, because ultimately, now that you know how the prop firms actually make money, why would they allow 100% of people to pass? And the last thing that I'd look out for is reviews. You can join, a lot of these prop firms have Discord channels, so you can poke around in there. You can also look at reviews online and really quickly see whether these prop firms are a scam or actually if they're actually in fact going to pay out. So now let's talk about whether you should trade with prop firms or if it's a better idea to just trade your own money. And then I'll show you how you can increase your odds by like 10x at passing these prop firm challenges and getting funded. So should you trade with prop firms money or not? Okay, so here's some of the pros with trading with a prop firm. Obviously, it gets you access to a lot more capital, which is definitely a plus. Another plus I would say is that it forces you to have good risk management, right? Because they have strict management rules on your overall loss and your daily loss. This is actually going to help you become a better trader, because it's going to teach you to trade with better risk management rules if you do want to in fact pass the challenge, which I think is going to serve you the rest of your trading career. The third thing is that you ultimately have less risk, which in the game of trading is it's not so much about how much money that you can make, but how do we protect the downside risk as much as possible. And so your downside risk with a prop firm is ultimately just paying their small test fee. And if you don't pass, then you lose the test fee, obviously. So these are some of the pros. Some of the cons with trading with prop firms is that you have limited freedom, meaning that you can't trade however you want to. You can't have whatever drawdown that you want to. You have to abide by these prop firm rules. Also, prop firms put on a time pressure where you have to hit 10% target generally, or 8% profit target in just 30 days, which is a lot of the times difficult to do. And it causes people to trade differently than they normally trade, because they do have this time and this profit target goal that they have to hit within a certain time period. And ultimately, on top of that, it's just hard. Like I mentioned, only 6% of people actually end up getting funded and passing both phase 1 and phase 2. And then ultimately, you do get a profit share. Generally, you're only getting 80% of the profits. Whereas if you're trading your own funds, you get 100% of the profits, which I would say it's Yeah, you don't make 100% of the profits, but you're not risking any of your own money. So I'd say that trade-off is worth it. Okay, so with all that being said, ultimately, how do you decide if you should trade with a prop firm or not? This is the simple formula. Number one, answer this question. Do you have an edge? If you don't have an edge, then it doesn't make sense for you to trade with a prop firm, okay? Once you've established your edge, then you can make a decision if you should trade with a prop firm or not. And I'd say the decision is if you have less than $50,000 that you're trading with, then I would say that it makes sense to trade with a prop firm's money because ultimately you're gonna be able to trade a lot more money and make more money. If you have more than $50,000, then you can decide to trade your own funds, of course, but ultimately that is predicated on the fact if you have an edge or not. If you don't have an edge, then of course you shouldn't be trading with a prop firm. You should still be trading a demo account. So all in all, I talk a lot about prop firms. I think they're an amazing thing for people to get access to a lot of capital, and they can be this life-changing thing. Like I mentioned, the odds of you actually passing, getting paid out are very, very low. So we did something about this. We wanted to pass prop firm challenges, but we wanted to do it at the highest rate possible. I had tried to pass prop firm challenges manually for a long time, and it wasn't actually until we started developing our trading algorithms that we're able to actually pass prop firm challenges consistently. Now, I'm not saying that you're gonna be able to pass 100% of the time, but a lot of the numbers show that we can 10x people's odds of passing a prop firm challenge and actually getting funded simply by using algorithmic trading. So if you'd like to see how we're using algorithmic trading, how we've helped now over 400 people become funded professional prop traders with algorithmic trading, then take a look at this video right here. I interview my partner that developed the TitanX algorithm, and he shows you exactly how we're using it to pass these prop firm challenges. So go ahead and check that out right now.